Is the whole crypto passive income dream just a lie? Seriously, everyone on YouTube seems to be making thousands a month from this thing called crypto staking, but is any of it real, or is it just another get-rich-quick fantasy designed to drain your bank account? Well, I decided to put it to the test. I took $5,000 of my own cash, and for the last 6 months, I dove headfirst into the world of crypto staking. In this video, I'm not selling you a dream. I'm going to show you the unfiltered, no-hype reality. Every single dollar I earned, every stupid mistake I made, and the honest truth about whether this passive income was actually worth it. This isn't financial advice, it's just my story, my experiment. My hope is that by sharing my results, the good, the bad, and the ugly, you can make a smarter decision for yourself. So, why even do this? Honestly, like a lot of you, I was just tired of the hype. One video claims staking is your ticket to financial freedom. The next calls it a total scam. I wanted to cut through the noise and see the real numbers for myself, with my own skin in the game. My goal wasn't to get rich overnight, it was to see if I could generate a real, consistent income stream, something better than the pathetic interest my bank account gives me. First things first, I had to figure out what to buy and where to stake it. I knew putting all my eggs in one basket was a terrible idea. In crypto, diversification is everything. After a ton of research, I split my $5,000 across a few different coins and platforms to try and balance the risk with the potential reward. Here's exactly how I broke down my initial $5,000 investment. First, I put $1,750 into Ethereum. It's one of the big dogs, a more established crypto, and staking is now a core part of its network. I decided to stake this on Coinbase. Why? Pure convenience. It's incredibly user-friendly and a great starting point for beginners, even if their fees are a little higher. Next, I dropped $200 into Solana, or SOL. Solana's known for its crazy high speeds and a fast-growing ecosystem, and it usually offers higher staking rewards than Ethereum. For this, I went with Kraken. They have a great reputation for security and competitive returns, which helped me sleep a little better at night. Then, I put $1,500 onto Binance, the world's biggest crypto exchange. The main reason was simple: variety. Binance lets you stake a ton of different tokens with different plans, from flexible to fixed lockups. I split this money between Cardano, ADA, and Polkadot, DOT. With Cardano, a big plus is having no lockup period for staking, and Polkadot was promising some of the higher APYs among the major coins. Finally, I wanted to get my hands dirty in the world of decentralized finance, or DeFi. So I took the last $550 and used a protocol called Lido to stake more Ethereum. Lido is what's known as a liquid staking protocol. It's a non-custodial option, which means I keep control of my assets in my own wallet, a huge plus for security. This was definitely more complex, but by this point liquid staking has become the backbone of DeFi. So it felt like a crucial part of the experiment. So, the funds were deployed, the assets were staked, all that was left to do was wait and see if the passive income dream was real. Alright, 6 months have passed. This is the moment of truth, the part of the video you've been waiting for. How much passive income did my $5,000 actually generate? Let's not beat around the bush. Over the past 6 months across all platforms and all my assets, my total staking rewards came to a grand total of $187.34. There it is. Not exactly the life-changing income some influencers promise, is it? That breaks down to about $31 a month. But stick with me, because the story is way more interesting than that one number. Let's start with the $1,750 in Ethereum on Coinbase. The advertised APY was hovering around 3%. Over 6 months, I earned about $31 in ETH rewards. It was consistent, it was reliable, but it was small. Next up, the $1,200 in Solana on Kraken. Solana had a more tempting advertised APY, sitting around 7%. This was actually my best performer, generating about $42 in 6 months. Kraken's platform was solid, and the rewards were paid out like clockwork. Now for the $2,500 I split on Binance between Cardano and Polkadot. Cardano, with its roughly 3% APY, brought in around $22. Polkadot was promising a much higher APY, closer to 10%, and that earned me about $75 in rewards. Binance made managing both pretty simple. Finally, that $550 in Ethereum staked on Lido. At a similar 3% APY, this earned me just under $10. It worked perfectly, but the whole process was definitely more hands-on. So, you add it all up. $31 from Coinbase, $42 from Kraken, $22 from Cardano, and $75 from Polkadot on Binance, and about $10 from Lido. You get my total of $187.34. But here's the kicker. This is the most critical part of the story. The part that gets left out of almost every get-rich-with-staking video. Staking rewards don't exist in a bubble. The dollar value of the crypto you're holding can, and will, swing like a pendulum. While I earned $187 in rewards, the total value of my initial $5,000 went on a wild ride. During the first 2 months, the market was on an upswing. My $5,000 grew to nearly $5,800, plus my staking rewards. I was feeling like a genius. But then, the market took a nosedive, a pretty big one. Over the next 4 months, the value of almost everything dropped. That Solana I was staking. Even though I earned $42 in rewards, the price of SOL itself fell by 20%. My Cardano holdings dropped 15%. Ethereum held up a bit better, but it was down too. So, after 6 months, despite earning $187 in passive income, the total value of my portfolio was sitting at around $4,600. That's a net loss of $400. This is the unfiltered reality. The small, steady drip of staking rewards was completely wiped out by the larger market volatility. The passive income was real, but it wasn't nearly enough to save me from a market correction. Hey, if you're finding this honest look at staking useful and you appreciate the transparency, do me a quick favor and hit that like button. It literally takes 1 second, but it makes a huge difference for the channel and tells me you want more real-world crypto experiments like this one. This whole experience wasn't just about the numbers, it was about the lessons. And trust me, I learned a lot, mostly by making mistakes. I want to share them so you can hopefully avoid them. My first and biggest mistake was getting seduced by a high APY. When you're new to staking, you see a project offering 30%, 50%, or even 100% APY, and it's almost impossible to resist. I fell for it. Early on, I took a small piece of my funds and threw it into a lesser-known coin that was promising a 25% return. And for about a week, it worked. I was earning rewards like crazy. But what happened next? The price of the token itself completely collapsed. It fell by over 80%. The massive rewards were totally meaningless when the coin itself became nearly worthless. And that's when it hit me. The quality and staying power of a project matter infinitely more than a flashy APY. A 3% return on a solid asset like Ethereum is way better than a 50% return on a coin that's heading to zero. My second mistake was underestimating the tech, especially in DeFi. I figured my experience on easy-to-use exchanges like Coinbase meant I was ready for anything. I was wrong. Moving on to a DeFi protocol like Lido, while it worked out in the end, was a steep learning curve. I had to really learn how to use a self-custodial wallet, get my head around gas fees, and understand what the heck a liquid staking token was. It's a different universe with its own risks, like smart contract bugs. If I had jumped in with a larger amount of money without taking the time to learn, I could have made a very expensive mistake. The lesson? Start small. Never, ever invest in a system you don't fully understand. My third mistake was psychological. I obsessed over the daily rewards and lost sight of the big picture. In the beginning, I was checking my rewards every single day. Felt awesome to see those little fractions of crypto trickling in. But focusing on those micro gains made me blind to the macro picture, the market volatility. My portfolio's value was swinging by hundreds of dollars a day, which made my $0.50 in daily rewards pretty much irrelevant. All that monitoring did was create anxiety. The real power of staking is for long-term holders, people who believe in an asset and plan to hold it for years, no matter what the price does, day to day. The rewards are a bonus, not the main reason to invest. If you're going to stake, you have to play the long game. So, after 6 months, a $5,000 investment, and a net loss of $400, was it all worth it? My answer is a clear and resounding yes, but not for the reasons you think. If you're looking at crypto staking as a way to generate a stable, predictable income to pay your bills, then no, it was not worth it. The monthly earnings were pocket change compared to the insane volatility of the investment itself. To make a life-changing passive income, say $5,000 a month, you'd need a portfolio worth well over $1 million, even with a generous 5% APY. For the average person, staking is not a salary replacement. However, if you look at it from a different angle, it was absolutely worth it. First, as an educational tool, this experiment was priceless. I learned more about how these networks actually work, the pros and cons of different platforms, and the hard truths of risk management than I ever could have from just watching videos. Second, if you're a long-term believer in crypto, and you plan on holding something like Ethereum or Solana for the next 5 or 10 years anyway, then staking is a no-brainer. Letting your assets just sit there doing nothing when they could be earning even a small yield is a missed opportunity. It allows you to slowly increase your stack of coins over time. The key is, you should be staking assets you fundamentally want to own, not just chasing a yield. So, who is this actually for? Staking is for the long-term investor, the person who has real conviction in a project and wants to put their assets to work while they hold. It's for someone who understands the volatility risk and isn't looking for a get-rich-quick button. And who is this not for? Staking is not for the short-term trader who needs their money to be liquid and ready to sell at a moment's notice. A lot of staking plans have lockup periods that can trap you during a market crash. It's also not for someone looking for a safe, stable source of income. The risk is just way too high. So, what's the bottom line on my $5,000 staking experiment? The passive income dream, as it's sold online, is mostly a fantasy. The rewards are real, but they're small and can easily be wiped out by market volatility. But the reality of staking is that it's a powerful tool for long-term investors who want to support the networks they believe in and compound their holdings. It's a way to actively participate, not just spectate. The income isn't the main prize, it's a bonus for being part of the journey. Now, I want to hear from you. What's your experience with crypto staking been like? Have you found it to be worth it? Share your story and your hard-earned lessons in the comments below. Let's all learn from each other. And if you want to see more real-world crypto experiments where I put my own money on the line to find the truth, make sure to subscribe and hit that notification bell. I've put links in the description to the platforms I used, if you want to check them out for yourself. Thanks for watching, and I'll see you in the next one.